Hello, I'm Angeline Ong, and welcome to Beat the Street, the show that gives you all the tradable news and data you need ahead of the Wall Street Open. Coming up, US stocks indicated lower ahead of economic data and remarks from JP. Soaring oil, rising crude prices, firm on prospects for a prolonged restrictive monetary policy out of the US. And Nike on deck. It's back to school, but has the sneaker culture moved on? Now, good afternoon and welcome to this new edition of Beat the Street. Not long before Wall Street starts trading, I can tell you that we're just having some economic data trickle through. Here's the breaking news for you. We were expecting 2.1% for the final print of second quarter GDP. We got bang in line, 2.1%. So no change there, not much of a reaction on the hourly charts or the daily charts at the moment. Also, just checking in on initial jobless claims too for the week ending the 23rd of September. We were looking out for 215,000. We got an actual reading of 204,000. So a surprise of negative 11,000, reiterating how strong and resilient the US labor market still remains. Just checking in on the indices for you now. As I mentioned earlier, not much of a change on the markets at the moment. Just having a look at the US Tech 100 as well. Similar story there. Prior to this, we were looking at 14566. It has ticked up ever so slightly, but not very much at all. And checking in on the US 500, a similar story there as well on the hourly view. Prior to those numbers, we were at 4277. We're now at 4286. Having a look at volatility next. And volatility unchanged, still about the 18 mark there. What is also interesting is that we are waiting, of course, on some of those comments out from Jerome Powell and also some other comments that could move markets, potentially could come from other voting members, the Chicago Fed President Austin Goolsbee and Board Governor Lisa Cook. They're also expected to speak later today. I want to also check on the euro versus the dollar for you. Because it's not just a dollar story that we're looking at. We had earlier breaking news from Germany. EU harmonise consumer prices rising by 4.3% in September. And we're seeing that cross tick up slightly on the hourly chart. Now, as I mentioned earlier, it's not just economic news that we are keeping an eye on. We're also still watching earnings, particularly Nike. It's out with results, and it's also an all-session stock on the IG platform, where it reports fiscal Q1 earnings after the bell. IGTV's Jeremy Naylor covered the stock this morning on the European early morning call. Jerry, what are we expecting?
Yeah, we thought we'd pick this up in the early morning call this morning because it's an all-session stock, as you said, and it starts trading at 9 o'clock in the morning. So we've got several hours of trade already under our belt, although I have to say it hasn't moved an awful lot. I'll cover the share price in just a minute. But in terms of the numbers, at the Q4 numbers, you'll remember, Angie, we had the promise from Nike to suggest it's going to be another profitable year ahead. That was the fourth quarter. Looking ahead, now here we are in the first quarter, and I'm not completely convinced we're going to get some good numbers. Expected to decline, these are the numbers for a third quarter in a row to 75 cents per share from 93 cents this time last year. Still making a profit. It's just that it's slowing down. Revenues forecast to rise by 2.5% to just over $13 billion. Now this, if it comes to pass, would be the slowest growth in over a year. But I think behind this, traders will be particularly interested in the regional breakdown because its local North American market remains very soft. So Nike relies on other markets to keep revenue coming in, such as Latin America and especially China, where the company expects revenue growth to accelerate. It'll also be interesting, as you said at the top, to see if there's any shift from sneakers or trainers into more robust walking shoes, which are becoming a more fashionable item. So you stick a heavier sole on, you go up the ankle a bit, you make it a little bit more rugged, you give it a little bit of a woodland type twist, and all of a sudden you've got something which, not too far away from what they're already producing, is something else that Nike could move into in a big way. I want to take a look at the share price chart because I think it's worth looking at this in the long-term picture. I'll explain what this big heavy line is in just a minute, but the broad sweep of things is that since the beginning of this chart, which goes back to 1996, you can see when the stock was trading at something like around about $34. We have now this big rise that we've seen. I wanted to highlight two areas of this chart for you. The blue box is from the COVID lows, down at $60 a share, all the way up to what was pretty much a record high, all the way up to the intraday highs at $179.11. And that itself was 198% gain from the COVID lows to the highs, people realizing they wanted to go out walking more and do more exercise and so forth. So people were buying Nike trainers. And all of a sudden, things went wrong. A 54% decline from the highs there back on November 2021 to these lows down here on Friday the 30th of September 2022 last year. So what's been happening since then, and how do we trade this going into the numbers? Well, I've got several things going on this chart at the moment. I'll cover the bottom oscillators in just a minute or two. I want to take a look at this this cloud area here, which is the Bollinger Band. Now, we're not too far away from the bottom of this. This is a trend in place. Now, I'm fully expecting this trend to continue. We do actually have a rise of 0.25% at the moment on the stock. So potentially we could well see it open slightly higher when trade gets underway in an hour's time. But it is at the bottom of the Bollinger Band. But it does have more room to go before we cross that band again. When you get a trade down below the band, there's two things that happen. First of all, is there's a tendency to start pulling it back. The second thing is that the band expands. And that's exactly what we're getting at the moment. So let's take a look at this in the broader context of things, because I'm talking about a trend in place, despite the fact we've got a little bit of a rise today. Fundamentally, of course, we've got the numbers coming out after the bell. If they're good numbers, then we could well see a rise in the stock. But I'm not so convinced that the long-term picture is for a rise. Momentum is on the way down. And you can see at the moment, the momentum chart here is at its lowest since the 13th of June. 2023. But more importantly for me, I think, is as we've seen this drop come down here, look at the volumes. These red histograms down here indicate volumes. Now, when you get a red volume, it's a down day. When you get a green volume, it's an up day. So the last up day we had was the 14th of September, and it wasn't on massively high volumes, but we've seen volumes increase as we see the share price chart move lower. And that to me indicates potentially, technically, we've got more lower lows to come. Now, technically, if you're short on this at 89.91, 89.81, your stop would go above this area up here at around about the $92 level if you want to take this stock lower, and then you'd bring your stop loss in as the stock went on further on down. But of course, just to quickly highlight the potential here for a swing round is that fundamentally, if we get strong numbers out after the bell, not just saying about the numbers themselves for the first quarter, but the outlook. If that does come in with a robust outlook and the company is more confident about the future quarters ahead, all bets are off and it's going to go up. And so that's where the share price chart tells me what's happening. Question of waiting for the numbers, but technically it is looking quite weak.
Thanks very much, Jerry. I was just thinking if there was a pair of Nikes I'd love to own, it would be the Air Force One, which is still its best-selling shoe ever. Now, Micron Technology is another all-session stock which you can trade anytime, and you don't have to wait for the market to open. Just giving you a quick animated graphic here to tell you what the story is. It sees a wider than expected first quarter loss, and it's eyeing an adjusted revenue of $4.4 billion, and also intends to be NVIDIA's supplier. All this is key because Micron has been in the limelight of late. And what's interesting about Micron is if you look at a daily chart here, its shares have risen some 30% since the beginning of this year, despite all the issues to do with the supply chain crisis, the lack of demand, too much demand, post-lockdown issues as well. And it's managed to still have a gain of about 30%. Micron has essentially sat out the current generation of high bandwidth chips and instead made a bet that it can profit by selling higher performing chips starting next year. But it is a very tricky bet because they're more expensive to produce. There's also this concern that there will be a recession next year, although many major economies are trying to sidestep this, but that R word has started creeping back. Also wanting to check on Accenture for you, because Accenture is another one that we are watching. It's come out with some interesting forecasts. Accenture is not an all sessions stock on the platform, but you can trade it in the normal session. Accenture, the IT services firm, saying its first quarter revenue will be below Wall Street targets. This kind of mirrors what its peers are also saying. Emphasis halving its full year revenue forecast, and Tata Consultancy Services has also flagged soft demand. The tough economy is forcing many clients and companies to sit on their hands when it comes to big scale projects, because they also want to see how the economy is panning out and how all the AI hype is also progressing into reality. So much of that is going to shake out. Just want to check on a few stocks to watch for you as well. First of all, let's bring up Peloton for you. This Peloton Interactive is an all session stock on our platform. And currently it is showing a loss of more than 5%. This is interesting given it's just announced a 5-year partnership with Lululemon. Also checking in on Workday, because Workday is not all sessions, but you can trade it on the platform. Workday is falling in pre-market elsewhere because it's lowered its subscription revenue growth target. So that's an interesting one to watch when trading gets underway on the main market. Now, just checking on oil as well, because oil prices are steadying, but supply concerns are being offset by concerns that rates will have to stay higher for longer to fight strong inflation. We are looking at Brent, because Brent has hit the 96 level, above that actually, but it's now down around 37 cents. Here's a look at Brent for you on the platform. It's been very volatile recently and creeping ever upwards. WTI US crude also is another one to watch, because it reached $94 for the first time since the 30th of August last year, and it's come back off the boil again. Yesterday afternoon, the EIA said US crude stocks fell by 2.2 million barrels last week. Crude stocks at the Cushing storage hub fell by 943,000 barrels to just under 22 million barrels, the lowest since July 2022. Stockpiles at Cushing have been falling closer to historic low levels due to strong refining and export demand. This is all prompting concerns about the quality of the remaining oil at the hub and whether or not it will fall below minimum operating levels. For a check on what the technicals are telling us about oil, here's IGTV's Chris Beecham.
Oil prices have hit a new high for the year, indeed sit at a one-year high. As well as concerns about the low levels of supply at key hubs in the US begin to drive a fresh leg higher for oil prices. That, of course, is then feeding into the ongoing concerns about inflation and interest rates. And as a result, it's another firm risk-off morning for stocks generally, although oil stocks like Exxon have enjoyed a very solid week, with Exxon moving to a record high in yesterday's trading.
Thanks very much, Chris. Now, as you know, the stronger dollar has been supporting oil as well. Earlier, I spoke to Brendan Ahern, CIO of Crane Shares, who had quite an interesting view. He says that whilst we've had a stronger dollar given monetary tightening, the greenback's trajectory may change in the coming years. I asked him to explain why. Take a listen.
So the dollar's strength is somewhat driven by the Federal Reserve hiking interest rates. And so that's a real headwind for non-U.S. equities, including Chinese equities. You combine that with the PBOC, China's central bank, has been cutting interest rates. So we've seen some weakness in the renminbi. But if we think that, A, the Fed is potentially done, one more hike likely by the end of this year, At the same time, you're seeing the PBOC indicate that they probably are cutting this, slowing in this easing cycle. That should help stabilize the renminbi relative to the dollar. And I think if you actually see the Federal Reserve cutting interest rates next year, as a U.S. recession is probably going to occur, that dollar weakness would be a real advantage for the renminbi, which would be an advantage for Chinese equities, similar to other non-U.S. equities. So dollar weakness should be a tailwind. Over the last decade, the dollar strength has been a significant headwind. So maybe this baton from U.S. equity outperformance is going to get handed to non-U.S. equities. And certainly that's 14 long years that non-U.S. equities have underperformed the S&P 500.
Thanks very much, Brendan. Now, before we part, let's have a last look at how the market is looking. We're now minutes away from the open. Here's a look at Wall Street for you, or rather the Dow Industrials. It's called Wall Street on our platform, and we are seeing the it tick slightly higher, perhaps after those initial jobless claims number implied that the US labor market is more resilient than initially thought. Well, that's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insight, follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.